Hi, and welcome back to Stock Talk. My name is Joe Rabil. I'm with Rabil Stock Research. As many of you know, I wrote a book called Invest Like a Pro. What you might not realize is that that's not my first book. The first book that I wrote, it was really more of a manual, but it was never published. And it was a point and figure manual that I wrote back way back in the 90s for my client base who were interested in learning more about that specific way of charting. And so the reason why I'm bringing that up is when I talk about support and resistance, I kind of lean on some of those early ways of looking at the market. And I want to go into the agenda for today and just kind of expand on a little bit the idea of pools of money. And so I'm going to go into that. I'm going to show you what I'm looking at from that standpoint and why I think it can be valuable for you. And then I want to also add in another thought process when it comes to looking at support and resistance that I use, which is based on trend. If the trend, depending on what the trend is, that makes an adjustment for me on how I look at support and resistance. And then finally, we're going to go through the individual stocks that came through. Let's go ahead and get into this concept of support and resistance. And when I talk about pools of money, so what I've got here is Match.com up. I've got the monthly chart on the left and the weekly chart on the right. And what I want to do here is explain where I look at these pools of money. And you can see I've actually circled them. And I specifically did a circle here as opposed to a square where you could construe these levels on a square as being like a clear level of support and resistance. And I don't really want you to look at support and resistance that way. I don't want you to think, okay, this is a specific number. I want you to think more in terms of an area at the low end and an area at the high end. Okay, now these pools of money is essentially an area where we have an equal number of buyers and sellers that is causing a stock to consolidate and work sideways. And these are the types of areas that can launch moves in both directions, depending on which way the stock goes. But if you know where those are, you want to try and initiate trades as close to those pools of money as you can. Now, as a stock continues to trade higher and higher, you might have smaller and smaller pools, and you'd have to understand that those pools are only going to create a move only so big. So if you think about it in these terms, the bigger the pool and the wider the pool, the larger the potential upside. Okay, whereas if we have a smaller pool of money that's not very wide, it doesn't go on very long, then you should expect a smaller play in terms of that direction. Now, the other thing that I would tell you is that I used to use point and figure charts. I used to actually update by hand up to 500 point and figure charts every day at the market close. And what happened was when I ended up starting my own company back in 2005, the software packages weren't as good, and it was creating a lot more work for me to look at the point and figure charts. So what I ended up doing was I was comparing the point and figure chart, and I was using a 3-point reversal method, which are going to create longer term charts on the point and figure charts. And what I noticed about them when I compared them to the monthly chart is I was getting a lot of the same feel as to where these key levels were, these key areas of where pools were being created. And so I stopped using the point and figure charts because, again, it was creating more work for me to flip back and forth between different software programs. And then I started to make sure whenever I looked at a weekly chart, I also looked at the monthly right next to it. So I could really see the well-defined areas of where these support and resistance areas are. And we're just looking for concentrated levels where price trades and price is connected all the way through. There's not a lot of disjointed price action. It's all fairly tightly wound inside those circles. And I think if you know where they are, then it gives you a pretty good idea of where to expect support to come in and where to expect resistance to come in if you turn back to the upside. So I can look at this weekly chart and see, yeah, we have a pool now here. If we were to work our way back up, I'd start to think resistance starts to come in right at this level. Now, let me bring up another concept, and that has to do with the trend. If the trend is strong in a direction, like it is here, look at the strength of the momentum. Look at how MACD and ADX are confirming the trend to the downside. Notice how we've got a real trend in our favor to the downside. The moving averages are confirming. When I see that, I am less inclined to want to be very aggressive on the top end of a pool of money. I'm thinking more that it wants to work to the low end of that pool. Okay, so if we think about it in another way, if we're moving up and we start to trend to the downside, I'm looking at support and resistance this way, and once the trend turns negative, the lower ends here are more important to me than the upper ends. Okay, now it doesn't mean that I'm not watching to see how a stock reacts at this upper end if the trend is down, but I'm less inclined to be very aggressive at this level. Now, if you notice, it was pretty important because it caused a little bit of a rally. The point I'm making here is that this area is not likely, and I like to use words like not likely or probably because there aren't any absolutes when I'm looking at technical analysis. But here's what I'll tell you is I would be inclined to believe that it can cause a rally, but probably not a trend change. Whereas the lower end, when we get down to this lower end, we can start to think that we can get a serious reversal in the trend. Now, if we got to push up through here and it broke this 18 and we started to reverse, I'm not going to argue with it, okay? So I am watching that level. I'm just telling you my assumptions a lot of times lead to the lower end when the trend is down. And there's one other concept that I want to make sure you get, and that is momentum is actually more important to me than price support and resistance. Okay, this took me a while to accept because I always wanted to look at these levels and say, wow, we're coming down to that level, I've got to be a buyer. But I really lean on the momentum condition. If the momentum condition is strong, I have no assumptions at any of these levels. Okay, I'm not assuming anything. I am not assuming that it's going to turn there. I'm waiting for signs that buyers want to step in. I'm waiting for signs that the momentum is slowing down. Or I'm waiting for signs of climax. I mean, if we get a big drop here and we get a big, huge volume sign of climax, then that would be pretty important to me. So I'm using these levels, and I mentioned last week how I use them in conjunction with the fib levels, but I wanted to expand on this concept a little bit. Make sure you understand these pools of money, because if you know where a pool of money is and you break out of a pool of money to the upside, that is telling you that you're very likely starting a new leg to the upside. So if we have a pool here, let's just clear this off. We have a pool here, we make a move to the upside, and then we consolidate like this and break out. You know, I mean, I'm not saying it can't keep going. I'm just saying we've already expended a lot of the energy from this pool through this first leg. So you want to keep that in mind when you're looking at buying and selling stocks, how much downside risk you have if it breaks a key level. Once this broke this level, we had a lot of open air between that pool of money and the next pool. Okay, start to keep that in mind when you're looking at stocks, and let's go ahead and move on to the analysis. Before we get into the stocks, my services can be found at rabilstockresearch.com. The individual package, I send out about 2 to 3 reports each week, plus I have a special video for that package. If you're interested in trying it out, you can use a coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the analysis now. As we get into the stock side, I typically give detail on an index. I'm going to use Bitcoin this week, even though it's really not an index. I just think I continue to get a lot of questions about this, and I think it's worth spending a few minutes and going into detail on what I'm seeing here. I think if we look at this monthly chart, we had this basically long sideways pattern that we broke out from, and look at how extended it got from the 18-month, and look at how long it took for it to come back to this 18-month line. Now, one of the things that's bothering me, there's actually two things that's bugging me a little bit about this. One is on this drop was pretty violent with all the red bars here, big red bars to the downside. So we definitely got some selling. And what that tells me is you typically don't just hit the 18-month and go straight back up. Normally what you'll do is you'll come up and rally and then come back down and do something along those lines, or do what it's doing right now, which is kind of like consolidating. So it makes sense that this isn't ready to really break through there. But one of the things that is bugging me, we do have a slightly upward drift here, and maybe this is going to try and get up to the 50 level. But notice how MACD is going the other way. So when I see these going this way and this going this way, it kind of bugs me a little bit, and it does increase the likelihood that we're going to have some resistance up here. So if I'm looking at this overall, the potential is there for this to try and rally again. But I don't think I would do anything right now. If we look at the weekly chart, we have low ADX. And not only that, we don't have green or red over 25 either. There's no real sign of buying strength or selling strength right now. And when I have low ADX in both the weekly and the daily, I want to wait for some sign of strength to come in and have some confirmation. Now, the last time this moved up, you see how this made a move up and tried to break out through 45, and we started to see green DI start to kick in. At that point, the 18-week was still declining. So as if you've watched this show in the past, when I see a cross of a declining line, I'm expecting it to come back and retest. And now we're getting that test. And if we can turn back up from here, then I think I could be a little bit more constructive for a trading move. I still think there's resistance overhead on the bigger time frame as we work our way up towards 50. So just kind of keep that in mind. We could see, like I say, a little trading move, but beyond that right now, I just think this stock, this index needs to consolidate or work sideways, kind of move itself into a position where it creates a lot of energy for the next move. So, just kind of keep an eye on that. I think another move back up through 45 would probably be constructive from a short-term standpoint. I'm going to switch this. I just switched my charts. I now have an hourly up on the left because I got a request on this, and the person who was asking said that they were dropped down to the hourly chart for entry, which I think makes sense. Let's actually look at the daily chart, because what happened here is we had this move to the upside, and then we started working sideways, and this was essentially a zero line reversal with low ADX. So if you're looking for an entry off of this trade, you'd go down to the hourly. And what he said he had done is he was looking at a 1, 2, 3 pattern, and that would be the 3 exceeding this area up here. So we had the 2 down here. 1 is crossing the trend line. 2 is here. 3 would be taking out this high on this horizontal line. And so he was saying, does that make sense? Is that 3 makes sense in terms of looking at it this way, especially now that it's a low ADX pattern? And I totally agree. Once this started to drop down and test this area, you could see we had low ADX in place. And at that point, I'm less inclined to take the 2 pattern, and I'm more inclined to wait for a breakout. And so that's kind of what's happening here. We're just sitting back and waiting for a little bit more confirmation. I'd like to see it get through 25. I think if we have that, then there's a pretty good chance we're also going to get through the 18-week. You notice how this has been fighting the 18-week a little bit, but I like the idea that this has worked sideways in a quiet fashion and MACD is improving. So I could see a swing trading play here, which is obviously what this question is about. So anyway, hope that makes sense. But yeah, low ADX, after you go sideways for a period, you definitely want to use a low ADX trigger. Okay, let's get into the next stock here, CNHI. So the stock made a really strong move on the monthly and has worked its way sideways. We have good momentum conditions on the monthly. I like the fact that this held the 18-month line. What I don't like is all the volatility, a lot of movement and kind of wild swings. But if you go back and just look at the patterns and what has developed during the pattern, notice how we had this little bit of an undercut here and then we got a rally. Notice how we were overbought in MACD way back here, and look at how this has worked all the way back to the zero line. Notice how we have low ADX now. After having a strong reading to the upside, we had no subsequent sellers in place, and now I think this is getting in a better position. The only thing that's missing for me is that I would love to see this quiet down a little bit and not have so much volatility and gaps and everything. But I think we have to respect what's taking place. Any type of quiet price action over the next week or two sets this up for a breakout play. Crowdstrike. So we had a strong run on the monthly that overran, the pullback overran the 18, but notice how that 18-month is still rising. So that keeps this bigger trend still intact. But similar to what I said about Bitcoin, big red bars on the way down tells me that this is probably not a straight up affair, right? I think we go up and come back down and then do something along these lines. Now the weekly has crossed the 18, and this 18 is starting to cup around. If we can get any kind of a little dip here and then a turn back to the upside, especially if we can get a little bit better green DI to show up, I think this looks pretty attractive. So it's a stock that's held up pretty well when you look at compared to a lot of technology and a lot of software. So I do have respect for what's going on here, but we don't want to jump the gun. Wait for a higher low to develop and test of this 18-week. If it can successfully test the 18-week and turn up from there, I think this looks a lot more attractive to me. Okay, we got a Toronto Exchange stock. So look at this nice move to the upside, really nice trending pattern on the monthly chart with good momentum conditions in place. ADX is very strong. We're working our way back towards the 18-month line. What's taken place on the weekly is the most important. We had this consolidation pattern, and now the 18 has crossed down below the 40. So this is sort of that opposing trend pattern that I've talked about, where we're getting the 18 below the 40 on this time frame, while the monthly is strong to the upside. And not only that, the MACD was way overbought and has now worked its way back down to the zero line. Notice also we have low ADX. So this is in position now. The only thing that bugs me a little bit is because we had this spike, we can't really draw a trend line in place in this. And because of that, it makes it a little bit more awkward to try and figure out where the entry would be on an upside cross. Because the zero line reversal, you can draw a trend line in place and take that trade. So I think what I would do is I would be looking around this 73 area, taking out this prior peak, especially if green DI shows some strength. What would be ideal is we move up and green DI moves up, and then we get a little hitch before the breakout of this area. And if that were to happen, that would be a really good entry for this stock. Something to be on the lookout for here for sure. Okay, got a question on Google, and I think this is, this is sitting at a really key level. We can see this 25 level has been tested 4 consecutive months now. We still have good momentum conditions in place. We have a strong rising 18-month underneath. But if we break the 2,500 area, I think you have to respect that. And while it doesn't have a clear-cut pool of money in place, it's a clear level that 2,500 being taken out, we'd see a lot of MACD overrun, and we'd probably see red DI starting to kick in a little bit. That would really make me shy away. And if I were in this stock, I would probably consider cutting it back if it does take out 2,500, especially on a weekly closing basis. Occidental, so really impressive. And let's just look at this. We do have this pool of money here, right? I mean, I can look at this and say, we've got this area here, probably even look at it like that. This being the high end of this pool, this being the low end. We're kind of getting into the low end and we're overbought. So when I look at this, I'm sort of thinking, okay, we're at a level where this is, now remember, the trend has shifted back to the upside. Okay, so I'm not necessarily thinking this is going to be the stopping point for this, but it could cause a pullback like we've seen. Because we've gotten extended away from the 18, I think the pullback could set the stage for another leg up towards this bigger resistance area, which also coincides with this prior bottom here, another prior bottom here. I mean, I think the target for this is up into this 75-80 zone. That's really what I'd be thinking. Now, the problem we've got is entry. That's really the only issue right now. We've made kind of a big run. We're stretched away on the weekly chart. We're stretched away on the monthly chart. Yes, I could trade this off the daily because I have reverse divergence. You see how this is making a higher bottom while the MACD is making a lower bottom. I have strong ADX here. I could play this, but because I'm extended on the weekly, I have to accept the fact that I've got pullback risk in place. And a lot of times I see these try and break out from this position and then go through the pullback phase. So if you want to play it, there's no problem. You just have to play it really tight. If it breaks out and re-enters, I think I would kind of move on, at least for now, and let this go through a bigger consolidation pattern. But certainly a name to watch. I would just love to see it come back a little bit closer to the 18-week on some kind of a pause or pullback. And then I think that sets the stage for a nice bigger move to the upside. Alliance Resource Partners. So very, very strong move off this. Look at this monthly move that has gotten itself a little bit away from the 18-month line. We've had a really nice trend on the weekly, and that's actually the one thing that bugs me right now about buying it here. We've had a really nice signal here on this pullback, a nice signal here on this pullback, and even this was a pretty nice pullback. We've had 3 good pullback trades. This was more of a sideways breakout pattern, and then 2 pullbacks. And now we're a little stretched away from the 18-week. I would actually like to see this go through a little bit more of a complex corrective pattern now that we've gotten to the upper end of this pool of money. Okay, so I mean, again, I want to reference these things that I talk about. Here's your pool. This was not the target for me. It's the upper end. Now we've gotten into that and we've kind of exceeded a little bit. We've gotten stretched away. Look for some type of a consolidation to take place. And then I think that sets the stage for a pretty nice setup in this. I would prefer to see this at least come back to the 18-week. I'd like to see this go through a more complex correction on the daily chart. But a lot of good things taking place here. So General Motors. So, let's just go back and revisit this pools of money concept because I want to make sure I'm clear on this. We are coming back to the upper end here. Okay. Now, this is a pretty big area here. I mean, we've got the low end would be down at 30. Look at how this line is still rising. You see how this 18-month line is still rising? And we've gone down a lot. We're down 4 or 5 months in a row. We're pretty overdone to the downside. We don't have a lot of momentum here. Okay, so we've made a pretty big drop, but ADX hasn't even gotten above 25. So we've had a full length decline on this leg. I mean, that's a pretty big leg on the weekly chart, and ADX isn't above 25. So I don't actually think this trend is all that strong from that standpoint. And we're coming into the top level of this pool, and we're oversold. So, I mean, I think there's enough evidence here for me to consider this to be pretty strong support here around 40. That's how I would look at this. So I wanted to give you another example because, and this is why I say generally speaking or likely or probably, because it's not, there aren't any real absolutes in what I'm doing here. It's all about probabilities. I'm playing probabilities. And I think the probabilities are there's really strong support at 40. Now, that doesn't necessarily mean it's a buy. Unless you want to be a trader. You could trade it back up to the upside towards this 18-week line from here. I think that actually has a pretty good chance of taking place. Let's look at the soybean chart. I've had some questions about this as well, and I wanted to bring this up this week, and it's pretty crazy. And one of the things I wanted to talk about is the fact that what I do, and if you look at my book, if you've read my book, this pattern is literally, this is right out of my book. This pattern here, I don't actually talk about this combo, zero line reversal with low ADX, but this is, I mean, you could literally look at some of the stocks that are in there and this looks identical to it. Look at this turn to the upside and we've just taken off from there. So I kind of wanted to point out the fact that it doesn't really matter the instrument. It doesn't really matter the time frame. If an instrument trades heavily and you're using a 1-to-5 ratio, I think you can find these patterns all over the place. I mean, this is in a really, really strong trend line right now. Momentum continues to look good. I think you have to be impressed. The only negative right now is it's a little overbought. I'd be looking for some kind of a pullback in this, but pretty impressive. That's it for today. Thanks for joining me. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.